Welcome. In this video, XCN coin is in the critical zone, pump or dump. We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. A careful examination of the chart reveals a very significant support zone. This support level is an area that has worked many times in the past, meaning that it has been effective in changing the direction of the price. Such areas are one of the key levels in technical analysis that traders pay a lot of attention to, and they can lead to an upward reaction in the price. As of now, the price has touched this strong support area, and the potential for another upside reaction is quite high. In terms of technical analysis, this paints a very positive picture for traders. This support zone has proven its importance many times over, not only in recent price action but also in historical price data. Especially in the past, we can observe that strong upward purchases have come every time it touches this level. In other words, this region has been adopted by market participants as a reliable buying area. This is exactly the most important feature of support levels in technical analysis. The fact that they have worked in the past gives traders confidence that they can have the same effect in the future. This psychological factor increases the respect for technical levels, which often leads to prices behaving in a similar way when they hit them. The fact that the price has now pulled back to this support level could actually be a preparation for a new bullish move. Such corrections in the markets from time to time create the groundwork for stronger rallies. Because the price doesn't always move in one direction, it creates a direction with ups and downs and fluctuations. Therefore, a pause at this support level and a possible upward reaction indicates that the technical structure is functioning properly. In other words, the price action may not only be speculative, but also structurally positive. Another factor that increases the likelihood of an upward price reaction at support zones is volume analysis. If there is an increase in volume during the contact with this level, this indicates that buyers are starting to activate. This further strengthens the probability of a bullish breakout from the support level. As of the current structure, the price that has reached the support zone seems quite likely to be met by buyers here, because this zone works not only as a technical support, but also as a psychological threshold. This support line, which has been followed for a long time, may be a safe retracement point for many investors. Another positive sign could be the fact that this support level is not only a horizontal support, but also intersects a rising trend line. Such intersections are referred to as mixed support in technical analysis and make it highly likely that the price will hold at these levels. So we're not just dealing with a horizontal support line here, but also a dynamic one. This means that there is a much stronger technical basis for the price to turn upwards here. In addition, the operation of this support level may be the starting point not only for short-term movements, but also for a medium and long-term uptrend. This is because the reactions from such strong supports have the potential to allow the price to cross, not just a few steps, but several resistance levels one after the other. In technical analysis, this is called a trend reversal signal. This means that a buying reaction from support is not just a short-term correction, but the first wave of a new uptrend. In the event of an upside bounce from this support level, the price can be expected to reach nearby resistance levels first. However, depending on the strength of the buyers and the overall market momentum, it is also possible that this uptrend could spread over wider time frames. Therefore, the current position offers a remarkable window of opportunity for investors, both technically and strategically. Of course, risk management should not be ignored here. The advantage of trading at support levels, however, is that losses are usually limited and the potential for returns is high. But we can't decide the analysis with support alone. Let's look at other metrics. Stay tuned. When we analyze price movements within the framework of the Elliott wave theory, we can observe that they progress in a highly structured and meaningful formation. The current structure we're observing clearly indicates that we are in the third wave. As you know, in Elliott wave theory, the third wave is typically the longest and most powerful upward wave. This wave is the phase in which the market experiences the most intense buying interest, and investors fully embrace the uptrend without hesitation. Therefore, being in such a strong wave from a technical standpoint can open a significant window of opportunity for both short-term and medium-term investors. To understand this structure more deeply, it is also beneficial to look at Fibonacci retracement levels. Fibonacci ratios provide numerical reflections of market psychology and natural equilibrium points. Within the current structure, we can see that the price has retraced precisely to the 0,618 to 0,786 range. These levels are known in technical analysis as the golden zone, and in strong trends, it is very common for prices to find support in these regions and then resume their upward direction. In other words, these levels are typically where a third wave is expected to gain strength after a healthy correction and initiate a new upward move. The fact that the price has reached this zone can be interpreted as a signal of an upcoming upward surge. That's because the third wave is often when investors truly take action, the market gains momentum, and significant rallies occur. At this stage, the price may have completed the previous second wave correction and could be preparing to resume its upward movement. The current Fibonacci region technically supports this scenario. Moreover, reactions from this zone reflect not only technical levels, but also market psychology. Investors often recognize these critical Fibonacci levels and place great importance on them when opening positions. In technical analysis, such collective awareness often causes prices to react similarly at certain points. So, the current price level is not only based on technical zones, but also allows for the concentration of collective investor behavior. If an upward reaction occurs from these levels, a rapid and strong rally consistent with the character of the third wave can be expected. In Elliott theory, third waves are usually the strongest in terms of both volume and momentum. If the price reverses from this level and starts to make new highs, it would technically confirm the activation of this scenario. Furthermore, these types of waves are often recognized earlier by market participants, which means positive news flow and investor interest can further support the rally. This contributes to making the rise more sustainable and lasting. In addition, the price holding at the Fibonacci 0,618 and 0,786 levels not only strengthens the technical foundation of the uptrend, but also provides a favorable position for stop-loss strategies. These levels offer ideal points where investors can open positions with minimal risk while taking advantage of high upward potential. From a technical standpoint, these levels offer both buying opportunities and strategic advantages in terms of risk management. Also, the price spending time in this support region and consolidating sideways may indicate a phase of accumulation before an upward breakout. This shows that the price is at a critical decision point. If strong buying emerges in this area, the movement could quickly reach new highs in a manner consistent with the nature of a third wave. These types of price structures hold great opportunities for investors seeking strategic entry points. At the moment, we have a very favorable technical picture. Elliott wave analysis, Fibonacci levels, alignment of potential indicators, and signals from investor psychology all point toward the foundation of a potential rally. Third waves are the most profitable waves for investors in technical analysis because they come with high momentum and represent a phase where resistances are broken one after another and market confidence peaks. Therefore, identifying these types of technical structures early and developing a strategy accordingly can provide investors with a significant advantage. The MACD indicator is one of the most frequently used and highly trusted indicators among traders to understand the direction and momentum of the market. When we look at the stance of the MACD on the current chart, we see that it is moving at a very critical level and has started to turn upward just below the zero line, which traders are watching carefully. This could be a harbinger of an extremely important signal in terms of technical analysis, because a possible intersection between the MACD line and the signal line and its realization above or just below the zero level may indicate that the price may start a new trend. As of now, the MACD line is slowly sloping upwards. This may indicate that the market is losing its negative momentum and the buy side is starting to regain strength. Especially in bearish periods, such rebounds are often interpreted as the first signal of a major turnaround. Let's follow the MACD indicator. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.